So we are going to what? We are going to be solving what? We are going to be solving question 3 now. And the question 3 is what? I say the statement of financial position of Apican PLC. I said July 31, 2016 and 2017 is shown below. This is your statement of what? Of financial position. We have as at 31st, sorry, July 31 of 17, and we also have 17 as well. Then we are only presented with their what? With their statement of what now? Their statement of financial position. Now, the additional information now, what's the requirement of the question? Prepare the statement of what? Of cash flow for the year ended July 31, 2017, in accordance with what requirement of what IS7, using what indirect method. So here now, let's now go to the what? Let's now go to the additional information one now. Let's say the equipment which had cost what 45 million during the year to July what? July 31 now was sold in February for 17. The company depreciated its equipment at 20% per annum on cost, with a full charge in the year of acquisition and not in the year of disposal. Non-current asset investment, which had cost 38 million some years ago, was sold during the year for how much? Was sold during the year for 31,500. We also have dividend received. The dividend received was what? 7.5. And dividend. You also paid a dividend of this during the year. So that means that you also receive and you also pay. So please hold on. Please hold on. Just have a look at this additional information. So let's continue now. I say the dividend received during the year was 7.5, and dividend totaling of 150,000 were paid during the year. A 10% loan note were issued many years ago and due to be redeemed in January 2017. A fresh issue of 10% loan note was made in this particular current year. In January 2017 as well, the company issued 750,000 ordinary shares at a premium of 60 kobo. Then a cash and 7-day deposit ranks as cash equivalent. The net cash flow from operating activities using indirect method were 81,000. So that means that in this question now, the examiner has already presented you with the net cash flow from operating activities, and that is really that's really cool. You already be presented with the net cash flow. So
we'll just continue from working capital.
No. We'll just continue from investing activities now and financing activities. So we don't have anything to do with operating activities anymore. We just need to show it, and that's all. It's cool, right?
This kind of question I need to. I beg.
So you now say what now? What's the name of the company? Then we have operating activities. So now I need to continue now. And I told you something, if you remember yesterday, that when you are starting with cash flow, you should determine the cash or cash equivalent at the beginning, and you also need to determine the cash or cash equivalent at the end. So from this question now, trying to see what's our cash and cash equivalent. Can you attempt this now? What is our cash and cash equivalent at the end, and what's our cash and cash equivalent at the end? At the beginning, at the end. Can you attempt this? Or I should do it.
Wait. So cash on. Why is this in twos? Cash and cash equivalent at the beginning is hey Lord.
Oh yeah, now look at the format. Look at the format that we have yesterday now. This is a current asset now. We look at the information that you need for you to prepare that particular schedule. Then I will just scroll on to the current liability now, extract the information out from there.
He's waiting.
Yeah, me too.
Wait, just hold on.
I want you to do it now.
Yes,
unless we'll go and sleep.
No,
you're tired.
I'm not gonna sleep.
So you have to get it.
I'll get it. Just wait. Just chill. I'm just saying that. You say you're there's no overdraft now.
And let me go to the current liability now. Is it in the current asset that you see overdraft? Look at you, say.
Okay, there's overdraft. So we'll take. I don't understand why these numbers are two. It's confusing me. No, supposed to be 2 years. Why are we having 4 columns?
Means that's how they present it for you now. It's still the same thing now. 2. 1 error sign, 2017, 1 error sign, 1 error sign. It's for 16.
So this bank overdraft now, which one are we now going to take when it's 2?
Which one is 2? Is it not 1?
It's not 1. It's look at 60 and 266.
Where do you see it? And 266 is the total now. Is it not the total of the current asset?
Okay, this is Jesus Christ.
You need rest.
I don't understand what was going on. Okay, so bank overdraft is 60.
And now
for the closing. And opening is 0.
What do you have?
I get it.
What do you say?
I said bank overdraft opening is 0, yes, closing is 60.
Yes.
Then cash you said?
You have the data already, so let me just keep quiet. And for you to perform your magic.
Hey Lord. That was him.
Look at it.
I don't trust that laugh that you're laughing in the background.
No, it's not. Look at it. You know, this is bank. Let me even highlight it for you. No, very nice. So this is bank overdraft. You need it. You need this one as well. Cash deposit. They say it's qualified for cash and cash equivalent. And cash in hand as well. You also what? It's also qualified. So these are items of cash and cash equivalent now. So what's the total that we have at the beginning? What's the total that we have at the end now?
Let's start with bank overdraft.
And what do you have in the bank overdraft?
Beginning 0.
Hey, I want you to do it in your book now.
So that but you're not talking. So I don't know if I'm correct.
There's no need of me. You just give me the total, or I should do it.
Okay.
But next time I
No,
will
no,
not do
no,
it.
no. Let me do it first.
Then I'll
Beginning
do it.
0, ending 60. Cash on this. Can you go to that question? Cash on 7-day deposits. What does that mean? Well, beginning is. God, this thing's confusing me. I don't know why I'm seeing 2 columns.
The beginning is 75 for 7 days deposit. For cash at bank is 88 at the beginning. We don't have anyone in this current year. Not for my hand.
I've already fallen it finished. So if I add it, I have 60 for the. No, it's not how this add. Wait. At the end, I have 60. At the beginning, I have. Hey, Lord. Eight plus 5, 3, carry 1. So at the beginning, I have 163.
You have what?
163.
Okay, that's fine.
At the end, I have 60. We're supposed to be minus 60.
There's no problem. There's no in 2017. There's no cash. There's none. What's the overdraft that we have at 60? Abi? Then at the beginning, what do we have?
Nothing.
For what do you have for what?
Nothing for cash at bank. 88.
This one.
75.
There's no overdraft. Abi?
Yes.
So we have what 163, and we have negative of what? So meaning now that our cash and cash equivalent. Our cash and cash equivalent at end now is what? So that our final answer is what? Negative of 60. Cash and cash equivalent now at what? At beginning is what? Is 163. So we now have a decrease now. A decrease in what? In cash flow during the year. So what will now be the decrease in cash flow during the year? What do we have? What will be the decrease in cash flow during the year? If we start with what 163 and we end with what we end is 60. So what's our cash and cash equivalent decrease in cash flow during the year? What do we need to have here? So that if we less it from 163, we are going to have a negative of 60.
103.
It's not possible now.
I don't understand.
What I'm asking now is what, and please don't forget this thing. If you start with what 180 on 163 and you end with what 60, so what do we need to subtract here? What is it going to? What are we going to have here? What number are we going to have here? That will say what minus what 163. I'm going to have what? I'm going to have a negative of what? Negative of 60.
Minus 2 to 3. Minus 2 to 3.
Yes, no, now you are talking. So that means that we need to have a negative of what? Don't worry, it goes very soon. So that means that what we need to have what 2 to 3. If they say what 2 to 3 minus this, then we'll have a negative of 60. So please don't forget. So that means that our answer now, when we prepare the words, the operating is already provided for us. If we add operating, the investing, and what the finance, we must have a negative of 2 to 3. So that is that. So next time, please, I want you to increase your pace. At least take you time for you to prepare this thing. As now as you're learning as well, you also need to be fast. So now look at the additional information. One now. Let's say equipment which had cost what 45 million during the year to July 2014 was sold in February for how much?
15,000.
For 15 what? For 15,000. So you just go to the question and say what? Sales proceeds. It is assuming that you are preparing what operating activities. That is when you be thinking of what is there a profit on disposal or there's a loss on what there's a loss on disposal. But the operating has been what has been prepared. So the cash that we receive from the disposal, that is what you are going to take in into the what into the investing activities. The company depreciate the what? There's no need. You don't have any information about that. What's their depreciation? That could have been accounted for in the what in the operating activities, and the operating activities is already what is already provided for. So there's no big work anymore. Okay. Non-current asset investment, which had cost what 38 some years ago, was sold during the what year for this particular amount. So, and you can see now why this company are selling is because of what their operating activities is what operating activities is negative. So if your operating activities is negative, the only way you can get finance is by selling your what, by selling your asset. Let's say we have a certain individual now that does not have money and you have some land. So what you can do now is for you to sell that land rather than what maybe you approach your families or any other particular individual. So since you have a what operating is not bringing in money, so and you don't want to go external now for you to source for the fund, then what you can do is what sell your non-current assets. And when you have money as well, when this one is positive, buy non-current asset so that in case of the world, the case of the future as well, you also have something to fall back on. So here now, we also say what? Disposal. Disposal of non-current asset, which is 31,500. 31,500. So we have used what now? We have used the additional information too as well.
Wait,
A dividend.
sorry. Why are we
Okay.
not using? Why are we? Is it if it was operating activity? That's when we would have used the difference, right? That's what you said.
And yeah, so that we could have determined whether there's a profit on disposal or there's a loss. And you can see this one now. It costs you 38. You now sell it for what? For 31 as well. So that's a loss. So the loss now on disposal would have been accounted for in the operating
would have
activity.
added it back.
Yeah.
Okay.
But now they have prepared the operating activities for us, so we are not bringing ourselves about it.
So you see that I'm following now.
Then the next one now, additional information 3. There's a dividend received during the year was. So that means that you also have what investment and you receive dividend of what of 7.5. That is also fine. And a dividend totally what 150 were paid. So that means that you receive dividend as well and you also pay dividend. And the dividend that you pay now, that one will be the financing activities. But the one that you receive now, where are you going to put it? The one that you receive. Can you say something about dividend that you receive? For you to receive dividend, actually, let me even start from there. What could have happened? What was the first thing that happened before you receive dividend? Hello?
I'm hearing you. I don't know.
And for you to receive dividend now, what happened?
You sold
dividend
your share.
To who? No, it's not about you sold your share. You sell your share, will not receive dividend anymore. For you to receive dividend initially, let's say for example now, what could have happened if I say, if it inform me now that you receive a dividend of 10,000 naira from your company, the company that you invested in, what do you do initially?
That means that person had bought shares.
So that means that you have bought, and that one is a what? The shares that you bought now is an investment, Abby.
Yes.
So if you're also receiving dividend from your what? From your investment as well, it will also come here. So you say what? Dividend received.
Investment.
Mhm. So for you to receive dividend, it means that you have investment.
Yes.
Mhm. So this is what? This is 7.5 now. Then the one you paid now, it will be under the what? The financing activities. So a loan note, we don't need loan notes. The company issue a shares, we don't need that one now until we get to the what? To the financing activities. So now we now need to check what the non-current assets again, whether there's acquisition now. Because in the additional information now, we only have information relating to disposal. We only have information relating to disposal, and we have used everything now. So we also need to check now that do you buy more non-current assets during the year? That is the reason why we need to go to the SFP back now. Look at the what? Look at the property, plant, and equipment at cost. Last year it was how much? What was the price?
675.
This year it was what?
735.
So what could have happened? What
They
could
have
have happened? You know
sold.
it's increased now.
Yes, they have sold some assets.
No. Hold on. You know it is what 675 last year. Now it is what 375. So what happened? Can
They
you think
bought
of it?
assets.
They bought, so you can see now it's increasing. So meaning that what more asset has been acquired. So and we are not giving information about the assets that we acquire now. So you have to get that by ourselves. So let's say our what's working to now. We can say what PPE. So what we just do now, let me use the normal you say opening balance. What's the opening balance?
675.
So 675 now. Then what is the closing?
725, I think.
Let me go back. The closing is what? 735.
35.
So closing is what? Is 735. Then we are also told that you dispose, right? There was a disposal during the year. So let's go back to the additional information and the asset that you dispose. What is the cost? What is the carrying amount of the assets that you dispose? Look at additional information one. They say equipment which had cost how much?
45,000.
45,000. During the year 2014 was sold for how much? You sold it for what?
15,000.
So the assets that you dispose now is what is 45. So what is now our expected now?
630,000.
So we are expecting how much now? 630, right?
Yes.
And we have what's now the actual balance that we now have?
735.
So what could have happened now? What do we call this difference? Are you with me?
I'm with you.
We're supposed to have what 630, but we now have what 735. So what could have happened?
That means they sold more.
No, they didn't sell it now. This is what you're supposed to have. You know, you sell 45, then you're supposed to have 630. You are now having 735. So that is that you buy more now. Your asset has increased now. Do you get it? Hello?
This amount here, is it the amount that they're using to buy the assets or the amount that their assets cost?
No, this one now, this is the cost. This is the cost of the one that you also sell during the year. So your expected balance that you're supposed to have should be 630. You are now having what 735. So that means that you buy more during the year. Abi now, because there's no how your asset will increase from 630 to this. Is as a result of what? More acquisition. I hope you get what I'm saying.
I'm trying to get it.
We do something like this yesterday now.
Yes, I remember. What I'm
Mhm.
trying to get is this amount. Is it that you're saying
Which
the asset,
amount?
this 675, the assets that they have, all their assets is 675.
Yes, at the beginning, this is it.
So at
At the
the
beginning,
end, all their assets is now 735. That means they've bought more assets.
yes.
I get it now.
So normally, if you want this is what you start with, then you now sell 45. So that means that your expected now is what is 630, and you are now having a closing balance of what 735. So that means that you buy
They
more.
bought more assets, yes.
And whoa, this one, this is 30,
105.
105. So that means that the company acquired was. Or should I use this T format as well? Let me also show
No,
you that
no,
one.
no, no, don't use T format.
Why?
You like T format.
So that you understand it.
Oh
No,
yeah,
this
show me
one.
T format.
No, I will not show you. You have the format already, so you can do that one. So we have what additional what? We have additional PP. So we can say what that's our working to 105. And you are buying a bit. So is it going to be negative? So what's now our net cash flow now? From investing what? From investing activities. Fifteen, thirty-five
Minus
hundred.
51,000.
Minus 51,000.
Yes.
So you can even see the company is also trying sharp that despite their performance, they are still doing what? They are still buying more assets. So that's fine. Then the last one now is just to prepare the what? What do we prepare last now?
Cash flow from financing activity.
Call it finance. So, and when we are preparing the finance now, what are we going to check? What are we going to check? Tell me now. If you are preparing what financing activities, are you going to get the information from?
Equity.
It's not easy.
From
last
equity,
year, last year your ordinary share was how much,
300.
and now it is what 375.
375.
So it shows that you issue what issue of shares. So 375 minus what 300. Then you have what? You have 75. Then last year, there is no what, we did not have any share premium. So last year, zero share premium. This year you have what? You have 45.
45.
So that means that your what? Your share premiums also what? Your share premium also
Increase.
increase. And if you say what, it's already given in the what? It's already given in the question as well. That you issue what? Look at additional information. The company issue was 75,000 ordinary share at a premium of what? 60 kobo. So now check now. If you say what 0.6 multiplied by what 75,000, what do you have?
45,000.
So it's still the same. So now we are through with the equity now. That's the first one. What's the next place you are going to get your information from if you want to prepare the finance?
Non-current liability.
Non-current liability. Your non-current liability last year you have what 0 on 60, and now you have what 14% loan notes. There's nothing. So meaning that what this company has paid what? This company has paid that particular amount. Then you also have what 12% loan note. 12% loan note of what? Of 45 what? 45,000. So that means that money is also what? Money is also coming in. So I can just say what now? Loan note is also what? 45,000. Then the last one, that's all. We are not touching the words, the current liability. Then look at the word, look at additional information 3. You receive dividend of 7.5, Abby, and you also pay dividend of how much? You also pay dividend 150. So you are also paying dividend. So we'll go here now and say what dividend. Dividend what? Dividend paid. If it is dividend what? Dividend received. Dividend received it to be under the what? The investing activities. Dividend paid it to be under the what? The financing. So what's our net cash flow now from financing activities? So what do we have? 75,000 plus 45 plus 45 minus 150.
15,000.
So we have it was positive or negative.
Positive.
So now, and we have determined already that we are looking for how much now. What if you had the what? The operating, the financing and investing, we should derive what? We should derive 223. So let's now do that now. We have what? 187,000. Negative of 187,000. Negative of 51,000. And positive of 15. For operating activities is deficit of 187. For investing is net deficit of what? Outflow of 51,000. So just add what you just say 187 plus 51. What do we have?
238.
238. So 15 now minus 238.
223,000.
So this is what? The decrease.
Lord, let me just be balancing like this in the exam hall.
This is a decrease in what? In cash flow during the what? During the year. So 223,000, right? Then you're going to say what now? Cash and what? Cash and cash equivalent at the what? At the beginning. What is our cash and cash equivalent at the beginning?
At the beginning, 163.
What? 163,000. Then what's our cash and cash equivalent at the end?
60.
So that is that. I hope you understand this.
Yes, I do.
All right.
So the second part of the question.
And then the second part of sorry. They say reconcile the total cash and cash equivalent shown. And that is a what? That is not even what you prepare now. Is not even a working. This is the second requirement. That is, this is A now. This is what? This is B. This is what the B requirement is what is asking for. That is, you should reconcile the cash at the beginning and at the end. So the total cash at the beginning is 163, and then at the end is what? Is a negative of what? Of 60. So this is A, this is the B part.
Can you go back? Let me see what the question looked like. Reconcile the total cash and cash equivalent shown by the statement of cash flow. The equivalent figure shown opening and closing statements. We go pop. Okay.
Then they say comment briefly on the significance of the information provided by the statement of cash flow. And I want you to please write it down now. Write important of cash flow. Important of cash flow statements. Are you with me?
Yep, I'm here.
Just read about that before you sleep. Maybe you can just search for it. What's that the important of what? Important of cash flow statements.
Is it in the
Okay.
material you shared with me?
Yes,
Is
it's
it in the
also
material
there.
you shared with me? Okay, I'll read
Yes,
it
then.
from there. Somebody, can you open the door?
So look at this question. Can we solve one more? Oh shoot.
We can.
So what's the requirement of this question? The requirement of it is what? Prepare the statement of cash flow using what? Using indirect word. Using indirect method.
I can't see it. Your screen is moving slower than.
Is the network. How far now?
I can see it now. Prepare the statement of cash flow of perfect world using indirect method.
Now look at this additional information. Any problem?
There's dividend paid. That means it has to go to either operating activity or financing activity.
It's not easy.
The perfect world finances withdrawal about purchase using finance.
It's good to be intelligent too.
Okay.
And I'm with you.
During the proposing plant and equipment which would have cost to purchase outright was acquired under finance lease.
So
we
now,
not do finance lease.
Don't worry. It's because of the day that we are. There's a question I want to solve under finance list, especially.
Okay. There's no disposal of property. There's depreciation, which we'll take out when we're doing, is it take out or add back? Which will
whatever
add
the
back
English
when we're doing operating activity.
All right, now that's fine. So now in this question now, determine the what? Determine the cash and cash equivalent.
Okay, let me do that one.
And let me tell you something. Do you see anything like bank, the current asset? Look at this question.
No,
Don't write that.
no.
There's not anything. I'll be okay. Look at the current liability now. What are the cash and cash equivalent that you can see here?
Bank overdraft.
It's only bank overdraft. So that finance lease is different. So the only thing that you can add there as cash equivalent is just these two items. I'll be sorry, this one item. So there's no need of preparing any schedule. So our cash and cash equivalent at the end now is 697. At the beginning is what? Is 922. So that's just it. I know it is overdraft, so it's going to be in negative, right?
Yes.
So there's no need of preparing any cash. Once it is just one, then there's no need of what. So that means that our cash and cash equivalent now at the end is 697. At the beginning is what? Is 922. Okay?
Yes.
So there's no need of, don't stress your biro.
Okay.
So we cannot prepare the work. Let's not prepare this now.
Can you use another whiteboard?
Right, let me change the marker. It's still the same thing now.
So it's not be too much in one page.
Okay. So what's the first thing that we start with?
PBT, profit before tax.
All right. So and their profit before tax is how much?
4725
So
million.
and million, yeah. So after then, what are we going to do?
Add non-cash items.
So do we have depreciation?
No.
We surely have depreciation. There's no any financial statement that will not have depreciation. Just like the way you give us capital allowance as well.
Sorry, depreciation charge for the year. It was no disposal. That's what I wanted to say. They said there were no disposals, but there's depreciation 4365.
Okay. Then after that, what are we going to do again?
Finance cost or interest paid.
It's not easy. No time. So we have what? We have finance cost, which is 1125. And do we have anything like profit on disposal? At least, okay, sorry, you already
They
been
said there was
told.
no disposal.
Yeah, so there was no disposal. So add these two together now. What do we have?
Five four nine zero.
5490. So 5490 plus 4,000. This is now what we call what? Net what? Net cash flow before what?
Working capital.
Before,
Before changes in working capital.
yes.
I think I like this cash flow more than account.
You can see it's fine. Once you just understand the format. So addition of the two.
10 to 15. 10 to 15.
Okay. Then we can now be doing the changes in what in working capital now.
TTR.
Yeah. So we have inventory. So let's go back to the question and check what is the inventory. The inventory last year is 7.2. This one is what? Is
6,750.
So don't forget, just say opening
Opening minus closing.
minus closing. Opening is what? 7.2, right?
Yes.
And closing is what? 5,000. I'm sorry.
6,250.
Yeah. No, sorry. 6,750. So what do we have? Trade receivable.
450.
This is 450, right?
Yes.
Then trade receivable. Trade receivable 81 and what?
81 and 99.
What do we have?
Minus 18. Trade payable.
Trade payable 4,905.
And 5625.
What do we have?
Minus 720. So we'll put it as plus.
As how much now?
720. It's minus 720, but we'll write it as plus.
Yeah, you reverse it. So what's the total?
Minus 630.
Minus 630.
Yes.
Then after changes in working capital, what are we going to do again?
Tax.
So let's get our what is our cash flow? Cash flow from operation.
9585.
95.
85.
So can you try now to calculate the what? Try calculate the tax now. And calculate the tax now. You have one. I mean, look at what's based on the format that I showed you yesterday. Let me highlight all the information for you. You have current tax, and you also have what now? Deferred tax. Then capture all this data now. So I'll go to the income statement.
Wait. I don't want to scatter this thing I'm writing. I have to write it somewhere else. Hold on. Trying to get. Okay. I have that. Go to the P&L. Income tax expense. Hold on. There's only one income tax expense.
No, that's what you need now.
Wait, let me try.
Time is going. Alpha.
I'm doing it. I'm solving it.
I know you are doing it. I want you to be fast.
Sorry.
No, I'm not in a hurry, but I just want you to be what? I just want you to be fast as well in providing the solution.
Okay.
3 hours is very short.
Very short to. And what's the P&L? 2025. Beginning and this beginning closing, right? Wait. This beginning, let me just add it. Yes. Okay.
Alpha.
I'm almost there. Paid 2025. So expected is what's expected? Expected. So, that is minus 2025. Yes, 770 is expected. Wow. But now paid this much paid national 5 8 3105
31
3105.
as your tax.
Yes.
Okay, so let's go now. What's our deferred tax? Sorry, the current tax
3825.
for last
Current
year.
tax 923.
What do we as deferred tax?
3825.
3825. All of the one that we have in the POL.
2025.
2025. So if you add all these two together, what do you have? What was the closing balance?
The closing balance is deferred tax is 4815.
4815. What of current
Current
tax?
tax is 1013.
1013. So add
So
these
this
two
time
together. Add these three now.
6773.
6773.
Yes.
Then we also have what 6773. DT and CT. Bring it down. Our DT is 48113. Then we also have
4815.
okay, sorry, 4815. Then this one is what 1013. So what's our tax paid? This minus this two, what do we have?
945.
That's what you have to know.
That's not what I have.
What do you have?
I
Where
have
is it?
3105.
And it should be what you just do. Do that. There's a mistake somewhere now. So you just say what now? Opening. Abi? Maybe the opener is 2, Abi. Deferred tax and current tax. What do you have? DT is 38. Abi, this is what you do.
Yes.
And then what of DT? Then you say POL. POS is 2025. Then this one is what 923.
Yes.
Then when you add everything, what's your expected? Do we have the same expected?
No.
And so that's what happened to your calculator.
I subtracted the P and L now.
No, you add it now.
That's
This
the one
is
that
what
is paid.
no. You see, this is what we have. This is liability as tax that we have last year. This is what we have this year. So if you add these two together, you have this. Then you subtract the what? You subtract the closing. DT and what? And CT as well. Then you can just bring it short here. You can say, what's the closing? This is 4 for DT, 41. Then this one is what? 1031. We had everything.
525 5828.
5828. So you just say 5 what? 5828. Then what was the balance figure? So this is what this is tax paid. $945. So the interest now, the interest that we have. Do we have, let's now go back to the what? Go back to the question now. Check. Like, is there any place that we have interest again, like finance costs? Look at the current liability. Is there any place again? Do you have anyone?
Last, please.
And lease is no lease is different. Do you have anything like interest again in the
No.
current liability? Eh?
No.
No. So what you just add at the top now, you just less it as well. You can just say what finance costs. Or if you do not what bring it here, you still have the option of what take it back to the what you go and put it under the financing activities.
25.
to 5. So now what's now our net worth now? Net cash flow from operating activities.
7515.
7515.
15.
Then go to the second one now. Investing what? Investing activities. And if you are preparing investing activities, where are you going to focus on?
Non-current assets.
And where?
Additional information.
And additional information. So the non-current asset last year is how much? 16, Abby? Can you see it?
16,650.
And this year it is not how much?
18,900.
So what could have happened?
They bought more assets.
They bought what? They bought more assets. So let's not determine the what? The assets that they bought now. What is the value of the asset they bought? So you can say now, what now? Our working two. I can just say PP.
Please don't use T table.
There's no problem now. What's the opening? No, this one, don't worry, I'll do it the other way around. So sorry. So what's the opening balance? You need to check that. What do we have last year? Last year we have what? 16,000 what?
650.
Sure. Then this year we have 18,900. Then do we have depreciation in this question?
Yes.
The depreciation is what? 4 what?
4365.
4365. 436 what? 65. So let's go again. Is there anywhere that we see? Look at the additional information too. Let's say Perfect World PLC finance a number, but not all of its property, plant, and equipment purchased using what finance lease. During the period let's say it's finance, so that means that you enter through a lease agreement. During the period, the property, plant, and equipment which have had a cost of what 2.7 to purchase outright was acquired under what? Under finance lease. Finance lease just like you are doing hire purchase. So instead of you what buying it outright, you can go into finance lease where you'll be paying it what gradually. So that's what this company is what is doing. That oh, you acquire during the period. But instead of you paying what outright now, you enter through finance lease agreement. So what we are going to do, we are still going to recognize we are still going to recognize the asset. So we are going to say what now? Finance lease of 2,700. But only that this particular amount now, we are not paying it outright. Not as if that this particular 2,700 now is out of our bank. No, we are still going to be paying the vendor a little by little. So add these two together. Now, what do we have? $18,900 plus 4,000. And you can also do it like this by saying what? Or opening. Opening was 16,650. There was what finance was. There's a finance lease. Finance lease of 2,000 what? 2,700. If you add these two together, what do we have?
$19,350.
19,350. Then our depreciation is 4,000. So what is our expected now?
$14,985.
14,985. Then we now need to look at now what is our closing. So our closing is 18,900. So what is now the additional? So what do we buy more? 18,900 minus this, what do we have?
3915.
3915. So this is the value of the assets that we acquire more during the year. So addition.
Wait, can you go to when you did this thing for tax? When you did the expected, you subtracted it from the closing.
This tax now. Should I explain this again?
No, you did expected minus closing to get the
And you
tax.
still give me this. I can still do it this way as well. No, it's just normal. I can still say, okay, since the expected is what? This is the expected. The expected is what? 6,773. Then I can say that was our closing. Our closing is what? 5,828. So what is now the? We expected to have this. Then we now have this. So that means that there's a reduction now. We have what? We have paid. So there's a tax paid. So it will just be the difference between the two. You get? And what's the difference now?
945.
945. So it's still the same. I hope you get it.
Okay.
Hello? You understand?
Yes.
So we just say what? Additional what? Additional PPE. And say what? Working two. And what's the additional that we have now? You say 3,000 something.
3,915.
So let's go to the what? There's no anything. There was no accrual of interest at the beginning or at the what at the end of the year. So this is our total what. So our net cash flow now. Sorry.
Why are you jacketing this PPE?
It's because it is what addition. Money is going out. You are buying more. This one is going through your bank. Anything that you see jacket in cash flow, it is outflow.
Can you shift to that the part of the table where you calculated this 3915?
No, there's addition. You're supposed to have this. You are not having this. So it means that you buy more. And if you buy more now, you pay for it. So money is what? Money is going out. Your bank is reducing. Now. And the one that you even buy more, but you did not pay. That one is true. What? That one is true finance lease. You are still going to make use of it. This 27, you buy, your asset is increasing. The asset is in your premises, but you have not paid for it. So the money is still under with your what? You still need to pay your vendor. But this one on 3,009 what 915. I mean, this one you pay for it outright. Do you get?
Okay.
Hello.
Yes.
So we have finance lease, right? So you can see we have how many finance lease? We have in the current.
Liability and obligation.
So we need to prepare what you just need to prepare a working for it. So just like what we have done for tax, the way we do our tax is just what I can just maybe I think working 3 now. So let me see what finance lease obligation. Then is a liability. You need to look at what's our balance brought forward. You just say non-current liability, then you say what current liability. So what's the amount that we have in non-current liability? Last year it was what 5.4 under the non-current. In the current, it was what 2,000. So 5.4. This 5.4, where do we say it's from? Check is from the word the non-current liability. The next one 20,025. It is also from the word. Then we'll say, well, what was the closing? From the non-current liability and also from the word from the current liability. Go back to the question again. It is what the one that we have for the closing 5,000 words, 5,850 and what 2,250. Then the next thing that we need to ask ourselves now is that where do we see finance this obligation? And you can see it is here. They say during the period, property, plant, and equipment which have what cost 27 to purchase outright was acquired under what? Was acquired under finance lease. So meaning that what we didn't pay for it. That particular asset now, this PP that we acquire, 2,000 what? 2,700. We have recognized it as our what? As our asset, but we have not paid for it. So that means that what? Our finance list will also do what? Will also increase. So we just say what? Addition, or you can say from what? From PPE, 2000 what? 2,700, and that's it. So if we add these two together, now what do we have? All these three together, what do we have? Then you can also present it in a normal way as well. You can say what? Opening. Our opening now, we have what? 5,4 as the non-current. We also have what? The current, which is what? 2. Then whatever we have, you bring it here. Then there was what? There's additional finance lease arrangement during the period. So additional PP was acquired using finance lease. So we say what? 2,000 what? 2,700. Then we say that what is our expected? Then we say that what is the closing balance? Then what's the closing balance? So whatever we have now, the difference is what we call what? The difference is what we call is the cash paid. I hope we get this. Say the same way we do our what? It's the same way that we do our tax. Under tax now, this non-current liability, that's what we call the defer. This one, CL, it will be on. That's the current tax. So add these three together now, what do we have?
10,125.
What do you say?
10,125.
125. Then we also have what? 10,125. So 10,125 now minus these two. This is what we call what? Cash paid. This is what we paid during the what? This is what we paid during the year. So if our expected now is what? Is 10,125. That's our expected. But we now have what now? What if you add these two together? What are we going to have? 5,850 plus this. What do we have as our total closing?
8,001.
8,000 what? 8,001. So we are expected to what? To have a liability of 10,125. Then we are now having what? 81. So automatically means that there's already what? A cash outflow. We have paid. Then what's the amount that we paid now? 10 minus this. That will be 2,000 something.
2,025.
So just go to the financing what? Financing activities. Say what? Finance what? Finance lease pay. That's our what? I don't know if it is working. 225. So was dividend paid? That is additional information. 1. There are what? Their share capital still remain the same thing, 5,454. So there's no any movement. And we are not going to touch what? We are not going to touch the retained earnings. So leave the retained earnings. So the only thing that we have to tamper with is the deferred tax. We have used it, the finance lease, we have also used that as well. So look at what they say dividend paid amount to what? 1,350. So that's the last one now. Dividend what? Dividend paid. And it is paid. So money is what? Money is going out. That's why we are putting it in what? In jacket. So what is now our net cash flow now from financing activities? Addition of all these two now, what do we have?
3,375.
3,375. So cash and what? Cash equivalent. at what? At beginning. Then we also have our what? Our cash and cash equivalent at the what? At the end. And the only cash and cash equivalent that we have in this question is overdraft. And overdraft is a what? Is a liability. Last year, it was what? 922. So we say what now? 922 as the what? As the beginning. 922. Then what do we have? What do we have this year? We have 69 what? 697. 6 what? 697. That's us 697. So what do we need to have here now? Because now is like our liability is what is like our liability is reducing. So it signifies that there's going to be what a net on we are going to have increase in what in cash flow during the year. Because if you start with a negative of 922 and you end with something lesser, so that means that there's already what a positive number here. That is why this one is reducing at a marginal rate. So now let's now check it now. From positive of what 751 minus this, what do we have? Net operating cash flow is what is 7515 minus 3,915 minus 3,375. What do we have?
225.
We have what? 225. And if you say 225 now minus this, you surely automatically have what? You are going to have this. So that's it. Even though in the exam, if you did not have this, that means that maybe there's a mistake in the question, or we are the one that made the mistake. I still want you to still maintain this one as well, still write what 225 there so that you get the mark for it. I hope you get what I'm saying.
Yes.
So that is that about this particular question. Do you understand?
Yes, I do.
So you can stop here today now. I have sent a question to you already, so I'll be expecting your solution.
Okay.
All right now. So thank you so much. Do you have any question before we go?
No, none for now.
All right now. You are enjoying cash flow now.